If you're a first-time home buyer, you want to avoid making these costly mistakes that could cause you to go into foreclosure or even experience a short sale. Make sure you watch to the end. First, what is a short sale? A short sale is when you owe the bank $300,000 for the purchase of the property, right? And you have to sell the house for $250,000. Well, in that scenario, that would be called a short sale, meaning you have to sell the property for less than what you owe the bank. Foreclosure, however, is when you get delinquent on your mortgage payments or you get behind on your mortgage payments. And in that scenario, the bank may go ahead and foreclose on your property, right? So one is you have to sell it for less than what you owe. The other one is you get behind on your mortgage payments and the bank go ahead and move forward with forcing the sale of your property at auction. It's called a foreclosure. All right, to avoid these types of scenarios, as a first-time home buyer, you want to make sure you do the following things. First, you want to make sure you're not emotionally attached to the transaction. That's the biggest mistake I see first-time home buyers make. They're too emotionally attached. They want to buy a property because they love the neighborhood, or it's close by the kid's school, or the proximity to family. A lot of these things are, very relevant reasons to purchase, but as a first-time home buyer, you make the deal on the purchase, not no other type of way. And there's a lot of reasons why you want to make sure you buy your first property right, and I'll discuss those details in another video. But for the purpose of this video, we're just talking about buying your first property right to avoid having to go through a foreclosure or a short sale. Now, right now in this market, there's a lot of good deals out there, but we have to make sure we're making the right decision, right? Always, as a first-time home buyer, always remove the emotional attachment. I know it's hard because it's our first property. We feel like we got to buy right? A lot of first-time home buyers, they say they want to make an investment, but they're emotionally driven, and you can't be emotionally driven to buy an investment, because an investment, we have to focus on the numbers first. So the first thing you want to do as a first-time home buyer, you want to look at the future value of the property. So you want to know, what is the future potential value of this property? I understand that in a scenario, we may be looking at a property that's worth $300,000. What is the future value? What is the potential future value of this property? All right. The next question is, if I had to rent this property out, how much can I rent this property out for? Right. Those are your two major concerns when buying your first property. And the biggest discrepancy right now is interest rates. Right. There's not many options, or there are plenty of obvious options, but a lot of first-time home buyers overlook them because they're too emotionally driven. And so in the scenario, I'm going to give you one of the scenarios I'm actually going through with a client right now. And I just want to highlight and emphasize why one deal is a good deal and the other deal is a bad deal, and no matter how much of a discount we get on the price. So on one deal, let's say there's a property that's worth about $390,000. The property is listed for $345,000. It needs some work, right? It's a great deal for an investor, not a great deal for a first-time home buyer for this reason. Current interest rates are 6.4%. On the mortgage for that property, the mortgage will be around $2,700. Now, the rental market for this area is $2,400. So that's about $300 deficit. So if this buyer needed to rent this property out, they would have to pay $300 a month to cover the mortgage for the tenant. Now, in the same scenario, there's a new construction options. Well, if there's a new construction options offering 2.99%, 3.99%, in those scenarios, the mortgage would be about $2,500 or $2,100. We're talking about a difference of $500 and $550 between the 3.99% and the 6.4% interest rates. And so the biggest difference is, how much can we rent the property out, and what is the debt service? If we had to rent this property out today, will the property cash flow? So the property that's the mortgage will be $2,100, right? It would cash flow about $300 a month. Well, the resale property that the interest rates is 6.4, you will have to pay $300 a month. The difference between the two properties is, one is a townhouse and one is a home, both for 4 bedrooms. In this scenario, regardless if you like the home better or if you like the townhouse better, you have to go with the numbers. And I'm going to say this to all first-time home buyers. Understand what makes a deal a good deal, right? And what makes a purchase a great purchase. An investment purchase, it may be good for an investor to buy that home that needs upgrades. right? It may not be good for first-time home buyer. And because of the simple fact that first-time home buyers normally using the FHA loan, meaning you're not putting down enough money to be able to create enough equity in the property and to reduce the debt service enough for it to cash flow should you have to rent it out. And so it's a lot of reasons that you may not be able to live in that home long term, such as you may get relocated for your job. You may get separated from your spouse. You may have a death in the family. You may actually lose your job. So any one of those scenarios may cause you to have to look at your two options. If I need to rent it out, right? Can I rent it out in cash flow? Or if I need to sell it, will the property have equity? Look, if you're a first-time home buyer, follow the numbers. If you can get if there's an option out there for you to get a 3.99, 2.99% interest rate, take it. Look, I'm Emmett Combs. I'm a broker here in Florida and Georgia. If you're in the market to purchase a new home or if you're looking to sell a home, I would love the opportunity for our team to earn your business. Please reach out to us for a complimentary consultation. You can reach us at 786-277-1190. And if you like this video, go ahead and hit that like button. And also, don't forget to subscribe for more updates.